Good evening, everyone. Welcome to Officer 24/7. My name is Niharika Valia Patnagar, and I am with you with the specific area of Advanced Business and Financial Management, that is ABFM. Everyone, when we talk about today's class, we're going to talk about corporate valuation, a very, very important topic. When we talk about corporate valuation, it is basically a company's valuation. And the platform that we're talking about is, our platform is JAIIB CAIIB English Medium. Everyone, when we talk about the specific area of corporate valuation, what do you mean by corporate valuation? Any organization which is looking forward towards its growth, right? What would it do? It might go and take a loan. It might go and do something which is going to help it. You know, matlab they are going to use one or the other methods to increase their earnings. So that is why whenever they try to take a loan, or they are looking forward towards leverage, or they are looking forward to any other source of income that they want to generate, they might have to tell people that they are worth it, right? They have finances. When they are looking forward towards those finances, then what are they dealing with? In this case, they are looking at the fact of it is they first of all have to prove themselves. This is what they mean by the term corporate valuation. So corporate valuation can be said as a specific term where you're going to value your organization for the sake of it, that you want to take loans from other organizations, or you have to prove your worth. So in this case, a company would be showing its worth. Acha, the point is that it serves as a various functions in the context. Yeah, it does. In terms of financial statement analysis, it really plays a very important role. Right, chaliye. Anyhow, let's move on towards the types of it. First type is book value, second is market value. See, book value is the value at which we purchase it. That is why we use the term book value. It is derived from the company's balance sheets representing the value of the assets as per the financial records. This means we are not doing anything, we are just taking up the accounting valuation. Then we are taking the market value. Market value means the value at which the market is looking at us. है ना? If the market sees our value is 10k, then our value is 10k. If the market sees that nahi, you have a lot of potential, then there would be a market capitalization or enterprise value. This is your value in the eyes of the world. When we talk about market capitalization or enterprise value, this is your valuation in terms of the world, while book value is the value at which you determine ki acha, in the books of accounts we bought the AC at a price of, say, I bought an AC. Nahi, let's make it more simpler. I bought a piece of land in the year 1984. ठीक है? Its value at that point of time would have been maybe 25-30k. I bought maybe a specific plot of, say, 14 marla. So it costed me around 25k at that point of time. Random amount I'm taking. Right now, when we talk about the same plot, it would cost you around 1 to 5 crores, depending upon the commercialization of that specific area, development, all those things. So let's make that amount of 1.5 crores. I'm taking it as 1.5 cr. So the point is, something I bought at 25,000, now the market value is 1.5 cr if I sell it today. But a few years back, I revalued it and I revalued it at 80 lakh. So in the books of accounts, its value would still be the same, that is 80 lakhs. While in terms of the market, it is 1.5 cr. The value at which I am ready to sell it today itself is market value. The value at which we are recording it in the books of accounts is called book value. Acha, now the point is enterprise value formula. First is components. Acha, when we talk about EV, EV is basically looking at your enterprise value from the point of view of multiple things. One is your EBIT. Second is that is your earning before interest and tax. You might be looking at from that point of view. You might be looking at from the point of view of your assets or your liabilities. Enterprise value is your value in the market. So the components of it would be your equity value, the value at which you record your equity shareholders, the value at which you have your short-term debts and long-term debts. What do you mean by debts, everyone? How do you define the term debts? Debt basically means the amount that you have taken from some other person. For what reason? You might be taking that specific amount as a loan, है ना? That would be covered here. So when we talk about the short-term and long-term loans, both are a part of it. Then current portion of the long-term debt and capital lease obligations. The lease which are basically done um, for our capitalization. Capital is basically when you are trying to increase your asset base or your working base. Next point is additional factors. What do you mean by additional factors? The additional factors are basically, one thing is your equity, your internal working, your equity, your liabilities, but there is some dearth to it. There is more deeper areas where you are not looking at. For example, your preference shares, then your non-controlling interest, the interest which is not the part of your control. There are certain parts which are controlled by you, and there are certain parts which are not controlled by you. You might be a major shareholder, but minor shareholders also exist now. Then we have other non-operating liabilities, that is no unallocated pension funds, the funds which we save for our employees and we are liable to pay for them. Then we have the area of deductions, which includes the cash and cash equivalents. Acha, why are we taking cash and cash equivalents out? It's a very, very important question. Pata hai? Why are we not including cash and cash equivalent? Simple reason that we do not include cash and cash equivalent is that when we talk about cash and cash equivalent, this is the money that we already hold, while equity is the money that we have to pay to the shareholders, liabilities is the money that I have to give to the other people. So basically, equity share owners funds, other people funds. Then out of the total funds we have to pay, cash and cash equivalent is basically the funds which can be paid off right away. So the remaining is our enterprise value. So we do not include cash and cash equivalents, otherwise it is going to be doubled. How, everyone? Because cash and cash equivalents means the funds that we are, that is given by that is cash and cash equivalents is basically a part of your equity only, na? A part of equity which is given here. What does it mean? The part of equity which we haven't invested anywhere is called our cash and cash equivalents. That means if we include it, there would be a doubling of the same, which is definitely not good for us, right? चलिए then. Now let's move on to the next point. International valuation standards. But in terms of the corporate valuation is done not at the national level, but at the international level. When we talk about the international level, they have the International Asset Valuation Standard Committee. International Asset Valuation Standard Committee is basically IVS. It is developed by the International Corporate Valuation Committee. This is IVS 105, in which they value, and even the methods that we study today, na, they are all a part of this IVS only. If you go through the specific area, na, this is how they specify. See, what are standards? Standards are basically something where you define ki this is the way the thing has to be done. That is it, है ना? That is the basic core of putting up a standard. कि देखिए, standard means that this is how the thing has to be done. Done, everyone? That's a simple term. Chaliye then, let's move on and talk about the next point. The purpose of this is to primary guide for a evaluation professional worldwide. Now, this is the point that if you're trying to value your organization national, international level, this is where it will use it. Done? Hanchi. Now comes the next point. We're done with this, huh? What is the purpose of this? It acts as a guide. See, the point is when you generate some standards, now then everybody has to follow it. For example, in schools, we had uniforms. One person wearing a uniform everywhere, every person wearing a uniform makes that sense, na? Done? Chaliye, now let's move on and talk about the next point. That is, what are the various approaches of corporate valuation? There are multiple approaches, everyone. First is market approach, how market sees you. That means based upon the price equilibrium in the market. Again, how market looks at you is the market valuation. How you look at yourself is your book value. So basically, when we're trying to value ourselves, it can be multiple, na? Our valuation or their valuation. So basically any kind of valuation plays an important role. ऐसा नहीं है कि we can just say कि अच्छा valuation that is ours is absolutely correct and the valuation which is done by others is not, because valuation anybody would have done plays a relevant role. See, when others are valuing our organization, do you know what happens? The basic reality that happens is there is a filtered way of looking at your own particular perspective. So when others are also looking at your organization and valuing it, it will give you true and fair view of how your organization is and how it has to be, right? Acha, look at this part. Approaches to corporate valuation. Number one is market approach. Number two is income approach. How much you can earn. Your earning capacity plays a very, very important role. Why? Because when we talk about the income approach, it talks about in focuses on anticipation of benefits. In this case, what is happening? Acha. So when we talk about income approach is basically it focuses on anticipation of benefits. How much income can you earn is income approach. Acha. Last is cost approach. This is your historical cost. If I buy a particular piece of land, okay, so that is what we if I buy it for 10,000 and then if I have to substitute it with someone else, something else, what is the price of that particular thing? That is cost approach. Considers the principle of substitution. Done? Chaliye. Now, when we have talked about another method, all these methods and valuation techniques and all, the next point that arises here is the process. There's a specific process. They're sophisticated in terms of this area altogether. So, in this case, when we talk about the sequence, can the sequence come in the examination? It can come in the examination in this manner itself, that you are supposed to write in the sequence what is there in the third step, what is there in the fourth step. I think that's the most insane kind of questions because that is difficult to remember. Yeah. So don't remember it by the rectification process, remember it by knowing the particular thing concept, right? Done, everyone. So let's move on to the next point. When we talk about selection process, what basis you decide the selection process? Number one is basis and premise. Premise is basically your assumption, because not everything can be variable. A few things has to be stable. है ना? A few things in terms of controlled environment. See, if you do not show a controlled environment, none of the theories can be applicable. Any specific theory you look at, each and every theory has this specific area where you talk about the basics and the premises. Then we have the advantages and disadvantages. What are the difference between the two? See, the point is in terms of valuation, when you value your organization correctly, it will boost your performance further, that you are really valuable. When you are not, then the particular point will definitely make a difference. Then when we are looking at the valuation processes, whether we are going for historical, whether we are going for market value, whether we are going for cost, whatever we are going to look at, we have to see whether it is beneficial or not. The first thing is your goal and your assumptions. Then second is the particular advantages and disadvantages of each and every method that is known to you. Next is appropriateness. Sometimes the particular time is not correct in terms of your uh, relevance, in terms of your uh, disclosures, because disclosures given later can create a trouble and given early can also be a trouble. For example, when we talk about dividends, if people already know that your dividend is coming, then the share price goes suddenly very high. in terms of dividend and all. And after that, what can happen is it can just boom, it can go down because of the fact that people know about that dividend has already been given or declared. Once the particular dividend is given, then there is no need to invest it in this year. So this particular ideology is something which can definitely affect the working. Done, everyone? So then we have information availability. The moment you acquire so much of the moment you acquire any organization, you're looking at the specific area of valuing the organization na. So information availability is very, very important. If you're clear about the information, the kind of information you wanted and the information you got is very similar, and then you can pursue with the specific method that is being used by me. Otherwise, every organization should work upon their valuations. Done. So let's move on to the next point. This was our process. Adjusted book value method. We are taking the book value or the value that is in the books or financial value, and then we are looking forward towards. Chaliye. Then comes adjusted book value. The book value, when adjusted, its value is see, when we talk about this adjusted book value, you take out the book value and increase or decrease the value of each thing. First is direct tally. If your book says it is of 10k, then it should be visible of rupees 10k, right? Then we have the specific area of asset tele. There is asset valuation. You value the asset and keep it in the books of accounts. See, when we talk about asset valuation, it is for both a tangible as well as intangible. And last is claim subtraction. Uh, when we talk about this claim subscription subtraction, now it is based upon what, everyone? Uh, See, when we talk about the claim subtraction, the portion which has already been given to you even before the subscription is done, or in terms of the yoga and all. So I think see, this is the area of book value approach only exclusively. How you manage your books, I have working upon the specific area altogether. In terms of books, that is book value approach, but this one is different from the original one. This is uh, chaliye. Then comes the next point. Here comes the MCQ. Take a moment, look at the MCQ, look at the chaliye. This says that with the when making valuation, market based approach should be used dash. Number one, when the size of the company is insufficient, size of the company and lower of the company, and then we have market-based approach should not be used. Market-based approach for this particular method should not be used. When the size of the company is insufficient, when the company's assets are lower than its liabilities. Yeah, this can be true because all the assets are taken over. What are we left with? Only the valuation term. See, in this case, the next point is when a company that when in an event that there is a significant and unprecedented shifts in the market price. When it is challenging to provide an accurate estimation of the realizable value in the event for going on. Acha, multi-value is basically that means with the organization of our uh, uh, in this case, one of the most important thing is that in terms of market-based approach, you're looking in the market, not at you. Chaliye, when we talk about market valuation has been supported by uh, multiple organizations whenever they're going for loans and all. How do they look at it, everyone? Look at this again. In the event of significant and unprecedented shift. For example, since 1984, I would have bought that land for 25k. In 2020, they felt that nahi, value everything again because for 3 months there is no work. Let's clean up our books of accounts. So you can clean up your books of accounts accordingly. है ना? चलिए. Now comes the next question, everyone. Under the discounted cash flow valuation, which of the following is typically moved by the discounting factor? Cost of equity, cost of debt, overall cost of equity, or overall cost of capital. Done, everyone? Cost of equity, cost of debt, annuity factor, or overall annual repair. What's going to be the answer? Annuity. Annuity is annual. Overall cost of capital. This is your total cost of capital. So what's going to be the answer for discounting? We use overall cost of capital. Chaliye. Now that is it for the day, everyone. I hope this particular session was helpful for you, especially in terms of corporate valuation. If it wasn't, then chaliye. But before I end my session, everyone, there's one thing that I want to show you. That is our website. Have you seen our website yet? That is www.ada247.com. Chaliye. Now, this is it, everyone. Go on to the specific area, click on the area of ada247.com. When we go to the area of www.ada247.com, you went to this area, everyone. In this case, you will find all our courses. Go on to the specific area of JAIIB and CAIIB. Go on to the specific area of JAIIB and CAIIB. This is where you will find all our courses, specifically the area of JAIIB and CAIIB. This wing, you have got CAIIB November 2024, and you can click on it and get the right course right away. You can go right in terms of this Mahapack. What can you do is click on the area of why see, the point is when you talk about the Mahapak 9, the Mahapak, you get English medium bilingual test series, ebooks, you say it, and from pin to an elephant regarding CAIIB examination. Every single thing is here. So what you need to do is click on the area of buy now, use the specific code Y. Just a moment. Look at this, everyone. Just click on the area of buy now. Use the specific code Y541 and apply it. And you will get it at a very good discount. Up to 80% discount is 77% discount is going on. If you use the code Y541, you will get 78% discount. That is a very good situation. So if you are planning to purchase our courses, then hurry up and do it right away. Thank you so much for being there, everyone. Bye bye. Thank you.